Hello and welcome. Today we are discussing the Self-Assessment System or SAS, a tax framework that shapes the responsibility of calculating and reporting tax liabilities to taxpayers themselves. Under SAS, companies must calculate their chargeable income, determine tax payable, and ensure timely payment, all while keeping accurate records. In this case study for the Year of Assessment 2023, we will explore the procedures and obligations company must follow when submitting their tax returns. As tax professionals at BDO, it is our role to guide clients through these processes, ensuring compliance with tax laws and minimizing the risk of errors or audits. Let's dive in! Now, let's talk about tax estimates under the Self-Assessment System SAS. Companies are required to submit an estimate of their tax payable using Form CP204. For the Year of Assessment 2023, this estimate must be submitted at least 20 days before the start of the company's basis period. For example, if a company's accounting period ends on 31 December 2023, they must submit their tax estimate by 30 November 2022. It is important to note that the new companies receive some relief under SAS, as they are exempt from submitting tax estimate for the first 2 years of assessment. This allows them to focus on establishing their business before managing his tax obligation.
After submitting the tax estimates, companies must follow a monthly installment plan to pay the estimated tax. Firstly, the total estimated tax will be divided into 12 equal monthly payments, and each installment will due on the 50th of every month. The tax payment schedule will start from the second month of the company's basis period. This system helps companies manage their cash flow by spreading the tax burden throughout the year, while ensuring a steady flow of tax revenue for the government. The companies can revise their estimate twice during the basis period, which is on the 60th and the 90th months. However, revisions can only be made to reduce the tax estimates. And there's a safeguard in place to prevent excessive reductions, which is the revised estimate cannot be less than 85% of the revised tax estimate or 85% of the actual tax payable, whichever is lower.
Submission of tax return form and payment. Companies have 7 months deadline after their accounting period end to submit their income tax return form or Form C. For instance, if your financial year ends on December 31st, your deadline is July 31st on the following year. The form must include all necessary details, especially your chargeable income and tax payable. E-filing is recommended for efficiency and accuracy. Amendment of return. Mistakes or oversights might occur, so there is a 6-month window after submission to make amendments. In cases where additional tax is due, it is advised to make payment promptly to minimize any potential penalties. For more significant error, it is suggested to consider the voluntary disclosure process with the Inland Revenue Board. This proactive approach in these matters often results in more favorable outcomes, potentially more lenient treatment such as reducing penalties or additional assessment.
The final step in the self-assessment system process is paying any remaining tax after the monthly installments. Companies must settle the balance when submitting their tax return. For those with a December year end, this payment is due by 31st July of the following year, the same deadline as the tax returns. It is important to pay on time, as late payments come with penalties that can increase the total tax owed. As conclusion, in the self-assessment system, companies estimate their tax and submit it 30 days before the start of their financial year. They then pay this estimated tax in 12 monthly installments, starting from the second month of their accounting periods. Companies can revise their estimated twice, but the new amount cannot be less than 85% of the actual tax due. The tax returns, Form C, is due 7 months after the financial year ends, and companies have 6 months to fix any mistake. Any remaining tax must be paid by the return deadline, or late fees will be applied. This system helps keep tax payment regular and give companies flexibility to adjust as needed.